Hi, everyone. Welcome to Help Your NGO's webinar on the Social Stock Exchange. I am Vinny Dholakia, Director at Help Your NGO, and I will be moderating today's session. Now, in today's webinar, we will be covering how the Social Stock Exchange can be leveraged to, raise funds for NGOs and social enterprises via different funding structures and instruments. But before we get into that, I would like to browse you through Help Your NGO's latest offering to help NGOs in fundraising. Now, most of you already know that Help Your NGO is a one-stop, shop for all individuals and companies to support vetted Indian NGOs. Since 2000, we have been helping donors make informed donation decisions by giving them access to analyzed information on 700 NGOs across India, covering 13 causes and all of the 17 UN SDGs. In fact, in recent years, we have launched elegant tech-driven solutions to support NGO growth. And today, I will be covering one of our solutions in detail. Via our donor community, we have supported NGO programs across rural and urban India, covering diverse causes like education, menstrual hygiene management, livelihood, sanitation, and many more. Mentioned here are some of our corporate partners and clients. At Help Your NGO, we strongly believe that our technology solutions can help nonprofits scale and amplify their impact. So while we continue offering CSR consultancy and NGO due diligence services, our efforts are now focused on scaling our tech solution, which is Hingo. Now, based on our years of experience and interactions with NGOs, we realize that one of the biggest challenges nonprofits face is raising funds to support their programs. And this is exactly the problem that Hingo addresses. Now, what is Hingo? Hingo is actually a one-click solution for individuals to seamlessly support vetted Indian NGOs. Our aim is to build an endowment for NGOs and support them over a long period of time. So a one-time donation via Hingo supports the selected NGO partners over 10 years. But why build an endowment for NGOs, you may ask? Now, globally, university endowments and foundations invest their corpus for long-term capital appreciation. And, typically the capital distributions from them tend to fund nearly 50% of their annual operating budgets. Here we've taken the example of Harvard University's endowment. Now, imagine if NGOs could rely on a similar pool of capital to support their operations. Our pioneering SaaS product Hingo uses low-cost technology to build an endowment and create a steady stream of money flows for NGOs, thereby giving them the visibility on their annual inflows and allowing much better planning of their programs. So how does Hingo work? Several individuals like you donate via Hingo and contribute to the Hingo endowment. Help Your NGO invests the donations, and every year 10% of the fund is redeemed and disbursed to the NGO partners. So assuming one donates 10 lakh rupees today via Hingo, it could result in a total payout of 17 lakh rupees to the NGO partners over 10 years. So if you think of it, the Hingo endowment could effectively exist in perpetuity, assuming a 10% ROI and a 10% redemption annually. Now, why should you partner for Hingo? It's simple. More funding opportunities for your organization, money inflows over several years, complete transparency. Help Your NGO provides end-to-end services, and it is a low-cost plug-and-launch solution. So while our work has been covered by various publications over the years, I am happy to share that the Times of India and the Economic Times recently covered how Hingu can, help NGOs in scaling and companies in amplifying their CSR projects. Our other SaaS product, the Systematic Giving Plan, SGP, received the award for the Best Social Impact Initiative at the India Wealth Awards. SGP is a product which is specifically designed for mutual fund investors. Over the years, we have hosted a series of webinars covering diverse topics with renowned entrepreneurs, Ronnie Screwwala and Mohandas Pai, actor and UNSDG advocate Dia Mirza, SEBI director Amarjeet Singh, Zia Modi, and many more. So you can check our YouTube channel to view the webinar recordings. Thank you so much for patiently listening. We will be sharing relevant links in the chat box. Now, without further ado, let's move on to the topic for today's webinar, which is decoding the social stock exchange. I'd like to welcome our guest speaker, Mr. Hemant Gupta. Hey, hi, Hemant, welcome. Let me quickly introduce you to the attendees, although you need no introduction. With over 3 decades of experience, Hemant is the head of the Social Stock Exchange at BSE and also the managing director at BRT-SIF, the technology incubator at BSE. He is spearheading BSE's tech incubator called Zone Startups India and is actively leading several accelerator programs. So Hemant, we are extremely delighted to have you with us today. You've been a part of the working committee and then the technical group for the SSE. So having you explain the SSE framework, the thought process behind it, and all of the processes associated with it is ideal for all of us. So over to you.
Thank you, Vinny, for your kind words. So the way we'll kind of architect this session is that I'll take about half an hour, perhaps, to go over the presentation I have, which gives a background about the social stock exchange, a little bit of history, and then from an NGO perspective, how does the whole thing work? And then we'll answer some questions that the audience may have. And I've found, so I've done about 25 sessions so far in the last 4 or 5 months, and I've found the Q&A session the most interesting part of the proceedings. So without further ado, let me share the slides. So as most of you know by now, the journey of the Indian Social Stock Exchange started in July 2019, when the Honorable Finance Minister made an announcement in a budget speech announcing a fundraising platform under the regulatory ambit of SEBI, or Securities and Exchange Board of India, for both for-profit enterprises and not-for-profit enterprises, so that they can realize their social welfare objectives. And shortly thereafter, SEBI sprung into action, and they first did some pre-consultations, which I was fortunate enough to be a part of, and then formed a working committee in September 2019. We submitted our report in June 2020, and shortly thereafter, a technical group was formed, which kind of delved one level deeper into the workings of the social stock exchange and came out with a report in May 21. And finally, in July 2022, the regulations started rolling out and resulted in this first social stock exchange in India being set up. One more piece of context I should give, that there are several other countries that have had various types of social stock exchanges. And there were lessons that we learned from the experiences that the other countries had, that we tried to implement as a part of what we were creating in India. So in a way, some of the stuff that we're doing in India is actually path-breaking, in the sense that it's not been attempted before. So I'll go over some of the highlights of what the two committees proposed. So the first one, which was constituted in September 2019 under the chairmanship of Shri Ishaq Hussain, a very senior member from the Tata Trust, Tata Group. And essentially, it boiled down to 3 key recommendations. And these 3 key recommendations are important because they laid the foundation of what was to become the Indian Social Stock Exchange. First, they said that SSE has to be a segment under the existing stock exchange, BSE and NSE. And the reason why that is important is that, in a way, the social stock exchange actually inherits the regulatory and governance framework and the reporting frameworks which these stock exchanges already have, which have been time tested, which have proven to be actually some of the best in the world. So rather than creating a separate stock exchange, the social stock exchange is a segment under BSE and NSE. And for those who are familiar with the way, at least at a high level, the stock exchange operates, even before the social stock exchange, the stock exchanges already had three segments. The main board, which is what most of us are familiar with, and the Sensex and the Nifty are a part of that. An SME segment, which caters to fundraising by small and medium enterprises, and a startup segment. So this effectively was a fourth segment that got added. The second thing that the working committee recommended was setting up a capacity building fund. And again, why is this important? This is important because for not-for-profit enterprises and for the donor community that would actually participate in the fundraising, this entire experience of the social stock exchange, as well as the capital markets, was something completely new. And therefore, it was important that we constituted a resource that would build awareness, build knowledge, and build capabilities to actually participate in the social stock exchange. Again, remember, this is both from from an NGO perspective as well as an investor or a donor perspective. Right. The third key thing that the working committee recommended was introduction of a zero coupon, zero principal instrument. And again, why this is important is that the NGOs or NPOs, as they're called in the SSE parlance, raise monies through donations and grants. And the stock exchanges do not have a method of bringing donations and grants onto the stock exchange. So therefore, a new kind of instrument was introduced called zero coupon, zero principal instrument, or ZCZP, which it seems a complicated name, but actually, if I explain it, zero coupon means coupon stands for interest. So no interest will be earned by the person putting in the money. And zero principal means that the person who's putting in money will not get the principal back, which means no interest income and you will not get your principal back. In other words, it's a donation or a grant. Okay. Then the technical group was formed under the chairmanship of Sri Harsh Bhanwala, ex-chairman of NABARD. And this technical group actually adopted all three recommendations and a host of other recommendations by the working committee, and came out with four key additional aspects to the three above from the working committee. The first being that the first step any enterprise, for profit or not for profit, has to undergo is establishing the primacy of social intent, which means that their purpose for existence as an enterprise is a social impact. Right? The second was that there would be disclosures that they would have to undertake. Now, being on the stock exchange obviously means that any company, any enterprise has to periodic disclosures, but we also added impact-related disclosures because the reason for existence of the enterprise on the social stock exchange was impact. The third, and this was also very important, was the formalization of the role of a social auditor to validate the outcome or the impact. The reason why this was important is that for a person who's putting in money into any zero coupon, zero principal instrument or any other instrument on the stock exchange, it was important for them to understand what was happening with their money. And it was important for them to understand it from a third party, a neutral third party that could validate what is happening on the ground. and therefore the introduction of a social auditor or a social assessor. And the last item is more for from a fund perspective or from a collaboration perspective. There's an existing fund called Social Venture Fund under SEBI guidelines. We recommended some changes to that to make it more friendly, right? And as a part of both the working committee and the technical group, we had several sessions with NGOs, with impact investors, with people who had vast amounts of experience in the social development sector, in the Indian social development sector. So what this resulted in, all of this good work that was done, is a series of regulations and notifications that started coming out on the 15th of July. And the last one so far is the one dated October 13th. And I'll not go through each of these items, but essentially they laid the framework for establishing the social stock exchange at the BSE and NSE. As a part of the process, BSE applied for approval to open the segment called the social stock exchange last year, and we were granted the approval for the same in the last week of December of 2022. And I'm very happy to announce that already in the last 3 months, we have registered 10 NGOs, and I'll get into a little more detail about what is registration in the next few slides. Okay, so broadly, why should issuer or a fundraiser come to the platform, and why should an investor or a donor come to the platform? From a fundraising perspective, one, remember what a stock exchange does. A stock exchange actually is a platform that's accessible anywhere across the country, and it has participants from every town, every city in this country, right? And therefore, any organization getting registered and looking to raise funds on the social stock exchange automatically gets visibility and access to that vast pool of funders. Also, the impactful work that is being done by the fundraiser also gets a national platform. And from a cost perspective, compared to some of the other channels that exist, this is a relatively low cost channel. And on the flip side, from an investor perspective, again, an investor sitting in any corner of the country can access social enterprises anywhere in India. It can review the work that they're doing before making decisions on putting in their money, and will also get transparency into what's happening with their funds throughout the life of the project. So what does it boil down to from a implementation perspective, or you as an NGO or any social enterprise wanting to come on stock exchange? What this means is that, remember what I told you, the first thing you have to do is establish primacy of social intent. In other words, prove that you're a social enterprise. Prove that social impact, social development is what you live for. Once you establish that, and I'll cover the criteria for that in the next slide. Once you've established that, then depending on whether you're a not-for-profit organization or NPO, or a for-profit enterprise or an FPE, the paths diverge. For a FPE or a for-profit enterprise, they actually go into the regular stock exchange system where other commercial for-profit enterprises list and raise funds. So remember, I spoke about the main board, the SME segment, and the startup segment. They would, depending on their nature, their size, they would go to their respective segments and raise funds through the regular means of equity, debt, or mutual funds, or other such means. If you're an NPO or an NGO, which most of us are today on this call, then you would first undergo a registration step where you would, where you would actually do a kind of a KYC or a registration on the stock exchange. And then subsequently you would raise funds. The fundraise would be through the, remember that 0.0 principal instrument I spoke about? It would be through that. Why did we break this process up into two parts? Simply because an NGO typically raises program money, right? Or funding at a program or a project level. And the whereas what we did is you come to the social stock exchange, register once, and then you can raise fund as many times as you want, with as many programs as you want. Right. So now let's get into a little more detail around establishing the primacy of social intent. Sorry about that. So coming back to where I was, so the first step, remember, was establishing primacy of social intent, this box here. So there's a three-stage filter for establishing that. The first is that you have to be working in one of 15 areas that were defined in the regulations. And the 15 areas are as follows. You can see them on your screen. I'm not going to go over them one by one. But essentially, they cover Schedule 7, they cover SDGs, and they cover Niti Aayog's priority areas. Plus, we've added a few, like if you look at number 14, which is digital divide in the internet. So some of the newer areas that have cropped up on account of rollout of information technology, etc. Okay, so first step, you have to be working in one of these 15 areas. Second is that at least 2/3 of your work has to be in one or more of those 15 areas, which means that a bulk of your activity has to be centered around these 15 areas. Okay? So it's not that you've done a project in one of those areas and you qualify as a social enterprise. The third is that for now, at least, certain organizations have been kept outside the ambit of the social stock exchange. Principally those with political or religious affiliations, corporate foundations, professional or trade bodies, infrastructure and housing companies, except those in the affordable housing space. And also the preference would be given to enterprises that target underserved or less privileged population segments. Okay, so this is the first step, and it's important for all of us to understand this, that you have to pass through this three-stage filter in order to come onto the social stock exchange. Now, let's say you pass through this three-stage filter. What happens next? If you're an NGO, then eligibility criteria similar to the one that's followed either through Section 135 or most corporates or funding bodies follow for an NGO. The first, of course, you must be a society, trust, or a Section 8 company. You must have a track record of 3 years. You must have a valid 12A, 12, etc. 10, and you guys know all this, right? Have a valid ATG registration. Plus, in addition to these 4, which most of us are familiar with, there's also a size criteria that's been added. And this has changed actually. It used to be average of last 3 years, but now it's become for last financial year. Must have a minimum of 50 lakhs of annual spending and must have raised a minimum of 10 lakhs. The reason why these criteria were put in was that that there are certain governance, reporting, and disclosure requirements that will be placed on an entity that gets registered on the SSE and the organization, and there's a certain size of fundraise, minimum size of fundraise that is allowed on the SSE, and the organization coming on board has to have the capability of meeting those compliance requirements, has the resources to meet those compliance requirements and do the requisite fundraise. That's the idea behind the size limits. So now let's say you meet all these criteria. What happens next? So to get onto the BSE Social Stock Exchange, you would log on to a portal, which is bsesocialstockexchange.com. Right? You would register your interest. Somebody from BSE would come back to you with details of what is called the listing portal. This is the listing portal that you see. This is the standard portal through which all enterprises coming on wanting to come on to BSC put in their details. You would log in, upload all the documents. One of the things that BSC will also do when they provide the login details would be a checklist of all the documents. And the checklist of the documents would basically be focusing on this criteria, which is your constitution documents, income tax returns and financial statements for 3 years, your registration certificates, these size requirements, as well as documentation which establishes what areas you work in, a certificate from a CA certifying that at least 67% of your work in these areas and that you're not one of these organizations. So essentially the registration documents that you would submit would be these documents. BSC listing operations team would in turn then review the documentation, come back to you if any clarifications, if anything is missing, and upon successful completion, the registration would be granted. Like I mentioned earlier, we already have reached double digits in terms of registration. So over 10 NGOs have been registered. And there are, if I remember right, about 7 more in the pipeline, which should get done either later this week or early next week. Okay. Now, let's say you've registered successfully and now looking to fundraise, right? So I've covered the zero coupon, zero principal instrument. But if you go back to that slide I had, there are a variety of instruments you can raise funds through, focusing on the zero coupon, zero principal, because that's kind of a donation or a grant which most of us are familiar with. Okay. So so first thing first, you must have a valid registration in order to raise funds. Okay. If you have a valid registration and you have a project for which you want to raise funds, you drop in an email to sse@bscindia.com. We'll respond with what is called an offer document template, or for those of you familiar with the stock exchange lingo, a draft red herring prospectus. It is actually nothing more than a proposal document that you would make for any donor, which lays out the objectives, the timelines, the budgets, the expected outcomes, dependencies, etc. And you would again, the listing portal through which you registered, you would submit this documentation. The exchange would review, and once the documentation has been certified, investors can start investing in zero coupon, zero principal. Here, I'd like to add 2 clarifications because this often comes up in the seminars that we organize. One is that the stock exchange, if you think about it, actually doesn't do fundraising. It is a matchmaking platform. It brings buyers and sellers together, right? So any entity wanting to come on to the social stock exchange will actually have to do fundraising before they come on to the social stock exchange. And the second is that usually, if you are familiar with IPOs, they're open for 3 to 5 days only. And there's a variety of reasons behind that. In fact, that window has been getting shorter. And one question that I've often asked in these seminars is, how will an NGO be able to raise funds within 3 to 5 days for a program, right? And the answer to that lies in what I said before, which is that the fundraising is done before you come onto a stock exchange. So as an example, if a company is doing an IPO, then typically they would actually line up most of their 80 to 90% of their fundraising before they come and list on the stock exchange. And a little small part actually gets committed during that 3 to 5 day window. So similarly, any social enterprise wanting to come onto the social stock exchange will actually have to do most of the fundraising before they get listed. Okay. Some of the key characteristics of a ZCZP instrument. The first is that a minimum issue size of 1 crore. and that's the current limit. I'm anticipating that to get lower as we mature and stabilize. Remember, this is what I like to call as the SSE 1.0. Based on the inputs that we're getting, we are actually evolving and becoming more and more mature. So as we mature, some of these things will change, but the current minimum size is 1 crore, a minimum subscription amount of 2 lakhs. Anything that gets traded on the stock exchange, whether it's equity, debt, or anything else, has to be in what is called a dematerialized form. And the minimum issue subscription is 75%. Right? And once the project is over, or the objectives of the program have been met, the ZCZP will automatically terminate. And obviously, there is no money is flowing back to the investor because it's a donation. So that's broadly registration and listing using a 0.0 principle. Next up, a brief look into what kind of disclosures are to be made. And again, it depends on what you're doing on the social stock exchange. So as an example, are you registered only? Have you raised funds? Or you're a for-profit enterprise that is raising funds? Remember, registration is not something that a for-profit enterprise does because it directly goes to fundraising. NPOs do registration because they can come and do fundraise multiple times, whereas an IPO happens typically only once. So at the time of registration, there are certain disclosures, and I will not go through item by item, frankly. I will be sharing, Help Your NGO will share some of this information with you, and we'll be happy to take any questions even later on. And there are so annual, they're quarterly. The one important part, which is the event-based disclosure, which is often asked, I get asked questions on, is that if there is an event in your organization or in the project that you raised funds for that will have a material outcome on either the functioning of the organization or the outcome of the project, you have to, within 7 days of the event, come to the stock exchange and declare that event. So it could be legal cases filed against you, COVID-19 or any other outbreak or any other issue that is happening. Let's say you're working in a geographical area and there is a political event because of which you're unable to carry out your activity. You'll need to come onto the social stock exchange and declare it within 7 days of the occurrence. Okay, and then there's an annual impact report. So that's broadly on the basics of the social stock exchange. One last slide that I had, which is to do with social auditors, because again, this is something new that got introduced in the regulations. So the idea behind the social auditor is not a financial auditor, right? It's an audit of the social impact, the social outcome that you're creating. This is a person that needs to get certified by something known as NISM, National Institute of Securities Markets, who have created a special 11-module course focusing only on social assessment, impact assessment, outcome assessment, with a certification exam at the end. And there are already several individuals who have qualified as social auditors. Social audits will be performed obviously by reputed firms and institutions. And very importantly, because the social auditors will have a key role to play in the ecosystem, there's a SRO or a self-regulatory organization that has been set up for the social auditors. Currently, there's one under the Chartered Accountant Institute, and there's, I think, one more that's been formed under the Company Secretary Institute. And the role of these self-regulatory organizations are empanelment, registration, standards about code of conduct, and if there are any violations, suspension, cancellation. So kind of a regulation of the operations of the social auditors. There are also standards that have been defined. ICI has published the standards. I think the Management Institute and the Company Secretary Institute also have come out with standards. I'm actually hopeful that rather than having multiple standards, we'll eventually converge onto a common set of standards that all these institutes can agree upon. Hopefully that will happen soon. So that's broadly a high-level peek into the world of the social stock exchange. Winnie, back to you, I guess, for questions and any comments.
Thank you. Thank you so much, Hemant, for taking us through that, insightful presentation. There are so many questions pouring in for the Q&A, and initially we had budgeted for 30 minutes, but wow, now we have over 45 minutes. So I think that's great. So the Q&A session is going to be the last leg of this webinar. And before I take questions from the attendees, Hemant, I had one question for you.
Yes.
So, I believe the SSE could be a game changer for the Indian social impact space. However, like you mentioned, it has not succeeded in many countries throughout the world. So, what are we doing differently to ensure that it's a success in India?
Sure. It's a great question, Vinny. So I'll go back to the committee slide and I'll point out what we did differently. So the first is that none of the stock exchanges, social stock exchanges, uh, kind of created this construct of a zero coupon, zero principle, which allows donations or grants to come onto the platform. Point number one. Point number two is none of them created a capacity building fund and enabling mechanism to transition enterprises onto the stock exchange. So, for an NGO that is used to a certain way of fundraise, this is a completely new world, right? And it's important that they are provided enough resources and enough ability to be able to take advantage of these. So the capacity building fund was the second thing that was not added to the armory in any other country. And the third is the formalization of the role of a social auditor. So the first two, if you think about it, are more from a NGO perspective, but the role of the social auditor is equally from an NGO perspective and from an investor perspective, because this is a third party that is giving comfort to a investor on the social stock exchange that, listen, what was supposed to happen to my money is actually happening to it.
Mm-hmm.
The impact that was supposed to be created is getting created. And therefore, I can trust this system. I can place reliance on the system, just like I can place reliance on the financial auditors that ensure that companies on the stock exchange are reporting accurate numbers. So these are the three things I would say that we are doing differently.
Got it. Thank you. So, Hemant, for that, your second point was around the capacity building fund, right? And I've gotten a question on the capacity building fund. So, what exactly is it, and what will the funds be used for? Also, what is the current corpus of the fund?
Okay. The status, I'll start with the easy part. Okay. The status of the fund is that it has been set up. It has been set up as a fund under NABARD. NABARD has several such objective-driven funds, including one around financial literacy. So they've set it up under NABARD. The participants in the fund so far are NABARD, SIDBI, BSE, and NSE. Okay. The size, the recommended size of the fund is 100 crores. And that obviously will not happen day one. It will grow as the requirements come in. And like I mentioned earlier, the objective behind the capacity building fund is to work with two sets of communities, at least. One is the NGOs, to build capacity for them to register on the social stock exchange, for them to list on the social stock exchange. And the second is to work with investors or donors to educate them about the workings of the social stock exchange and why does it make sense for them to put in money, put in funding through the social stock exchange, right? So those are the two broad objectives. However, the idea behind the capacity building fund is to enable the social stock exchange. So if tomorrow there's a third objective that gets added to these two, then I think we will be more than open to adding that. The idea is to use this money and make the social stock exchange, like you said, a game changer.
Got it. Thanks, Hemant. Next question is, what are the next steps once an NGO is listed on the SSE, and what is to be done to increase chances of funding?
Um,
So I believe as soon as an NGO is listed, I think there's like a time limit within which, the if it's a ZC, ZP instrument, then it has to be subscribed within a certain time limit and all of that, right?
Yeah, so I'm actually trying to, the question can have several interpretations, and I was trying to figure out which interpretation to take. But
Mm-hmm.
essentially, once you get, so one interpretation is once you get listed, you've done fundraising because that's when you get listed, when
Right.
you've completed fundraising, then you have to submit the annual reports, the quarterly reports. You have to get your project audited by social auditors, right? All of that stuff you have to do. The uh, the second answer to that question is that if you're happy with your listing experience, you come to the social stock exchange and do more fundraise, right? As far as increasing the chances of getting funds through the social stock exchange, I would say two or three things. One is that obviously the capacity building fund is going to get used to build awareness about the social stock exchange. As a part of the capacity building fund, we'll obviously try and promote the first few listings that happen, right?
Mm-hmm.
So that they get maximum exposure
Right.
and maximum number of investors. The second is that the proof of the pudding is always in the eating. So if you have done such similar projects in the past, as a part of your submissions to the Social Stock Exchange regarding the ZCZP, please do submit independent reports that validate the outcomes and the impact your past projects have created so that people have faith that you will be able to carry on the good work in the future. And the third is that, remember, the fundraising has to happen before, not, so the stock exchange will not do fundraising, right? So therefore, you should ideally do most of your fundraising before you come on to the social stock exchange and get your ZCZP listed. So use your existing network through the social stock exchange, through the capacity building fund, since we will be targeting new kinds of investors, including high net individuals, high net worth individuals, and philanthropists. Obviously, we will be sharing communication about your ZCZPs in those channels, and we will try and help out as much as possible, at least initially. So those are some of the things that we can together do, and some of the things you can do as a.
Right. So, Hemant, will SSE be assisting with fundraising?
No,
No.
SSE, a stock exchange is a neutral platform. It does not favor any fundraise. Uh, so, for example, if I'm a company that's coming to the stock exchange to raise funds or do an IPO, as it's called, stock exchange per se doesn't do any promotion,
Correct.
right? Because then there can be allegations of favoritism and.
Right. Okay. Next question, Hemant, is what will be the role of intermediaries, and do they also have to be empaneled?
It's a great question. Okay. Um, so I'll take the last part first. Unlike the SME segment or the main, where there is the concept of a merchant banker who has to be empaneled with SEBI. As of now, the social stock exchange does not have the equivalent of a merchant banker that needs to be empaneled. Having said that, obviously, fundraising is not something that will happen on by itself. There will have to be resources deployed to talk to investors and donors, to publicize the fundraise, and whether that's done through an intermediary or a third party, or it's done by internal resources of the NGO, somebody has to play that role,
Mm-hmm.
right? But so therefore, whether it's an intermediary that does it or the NGO itself through its own network that does it, at least initially, that fundraising will have to be done by somebody, like it is done even in an IPO or any other capital issues that happen on the stock exchange. Uh, and to my mind, over time, uh, because I think there is a thriving donation ecosystem in this country, over time we should have the fundraising should be easier on the social stock exchange. But I think the role of an intermediary or somebody who's doing fundraise will always exist. There is a second in kind of intermediary that also can exist. So it may not just be a fundraising role. The second kind of, so if you look at a merchant banker on the capital market side, right, they actually play multiple roles. One, of course, is a fundraising role. But they also play the role of a compliance agent or a documentation expert.
Mm-hmm.
So registration, listing, all of these have documentation requirements,
Mm-hmm.
right, which need to be followed. Fortunately, the good news is that on the social stock exchange side, these documentation requirements are relatively simple and straightforward. And the organization, along with a chartered accountant, should be able to fulfill all of them, to my mind, which is what these 10 NGOs have done. Right? They've not used a third party or a merchant banker to file for registration. They've done it themselves in partnership with CAs. But there is the scope of a third party or an intermediary playing the role of a compliance or a documentation agent, which I think is a little less likely, but it is possible that an NGO may feel that they're not comfortable doing this themselves and they want to hire an expert to do it.
Right. Got it. Um, as an NGO, Hemant, what pointers should be ticked to increase chances of funding? So I think the first part is getting the registration done, but between the registration and listing process, what should they do right?
I tried to answer this in the earlier question also, but from our side, one is that as a stock exchange, we don't have a role, right? But there is a capacity building fund that is being used to build build awareness, but also help at least the initial few listings to get an adequate level of funding. And we definitely, through the capacity building fund, try and help out wherever possible. Um, and we are doing publicity about the social stock exchange. We are holding seminars, like I'm doing this for with NGOs. I'm doing similar seminars with investors. So therefore, as we build a network of investors, we'll obviously share with them some of the ZCs, ZPs that are coming to the platform. But eventually, like I said earlier, either an intermediary or internal resources will be helpful in terms of doing the fundraise.
Thanks, Hemant. I think this is an interesting question. So, will companies and individuals be offered any incentives to donate or invest via the SSE?
Um, so there are three things, because they'll probably crop up later. I might as well take them head on right now. So one is that, as some of you may have heard, this whole ATG business is going away sooner rather than later. And therefore, the ATG ability is not available on the social stock exchange. As of now, CSR funds also cannot be routed through the social stock exchange. And therefore, the idea is to actually use the social stock exchange to open new channels of funding through family offices, through high net worth individuals, through foundations, right? And third is no FCRA funds are obviously allowed through the social stock exchange. I think that most people would have assumed, given the level of scrutiny that's going on around FCRA. So therefore, as of now, apart from the fact that an investor can get access to uh, social development work that is happening across the country without incurring too much expense, and the fact that they get complete visibility and transparency into what's happening with their money, the impact of the outcomes that are getting generated. There is, and the fact that they in one place they can actually get a menu of options available for them to put in their donations. And apart from the fact that there's minimum cost associated with doing this whole thing, there are no other incentives, but I'm hoping these four should be incentive enough for most people.
Okay. So there are a lot of questions around the fee structure. So one thing is, what is the one-time fee? And secondly, what are the annual fees for both NGOs and social enterprises?
The social enterprises, actually, there is an existing fee structure that's there. So remember, a social enterprise actually goes to the regular stock exchange. So they follow the normal fee structure, and that is subject to change, etc. So it's better to refer to the stock exchange website and get that fee. On the NGO side, there is a 5,000 rupee fee for registration. The listing fee and the annual fees, I think around 25 to 30,000. It's not much more than that. It's in that range, 25 to 30,000. So both from an annual renewal point of view and from a security ZCZP listing point of view.
Okay, thanks, Hemant. How long does it take for an NGO to get registered on the SSE after all the documents have been submitted?
So these 10 NGOs that I spoke about that have been registered have taken anything from 4 days to 3 weeks to complete the process from when they registered their interest on the portal to being granted the registration certificate. The difference of 4 days versus 3 weeks primarily has hinged upon how well you are prepared from a documentation viewpoint. Okay. Now let me spend a little bit of time on this question, if it's okay with you, Vinny.
Yes, of course.
Because it's an important one. So if you break the documentation down into two parts, right? The first part being establishing primacy of social intent, and the second part being the eligibility criteria. If you look at the eligibility criteria, this is stuff that you can do very simply, and you will probably be doing this for any donor, right? You have your documentation proving you're a society trust, Section 8 company. You have your income tax record for 3 years and your audited financials. You have these certificates, etc. And using your audited financials, it's very easy to establish that you have a minimum 50 lakh and a minimum 10 lakh, right? Where things get a little more tricky is on the establishing primacy of social intent, right? And here again, the first and the third are easy, right? You obviously know which areas you work in, right? And you obviously know whether you're in or out of these four. The tricky part is the middle one, where at a program or a project level, your CA actually has to look at the numbers and add them up and ensure that 67% of your revenue, expenses, or beneficiaries, remember, it's not all three, any one of the three, is in one or more of these areas. Now, the good news here is that it doesn't have to be 67% in each and every one of those areas, obviously. It is collectively, it has to be that. So what I've found is that the NGOs that had a more engaged relationship with their chartered accountant, and the chartered accountant was aware of what was happening in the projects and programs and was aware of the accounting related at a program level, not just at the NGO level, they had an easier time submitting the certificate. And the ones that perhaps had their chartered accountants being less engaged at a program level took longer to give these certificates. Okay.
Okay, Hemant, next question is there any certification through NISM to understand the SSE in depth? So you mentioned that it's there for the social auditors, but overall?
No, there's no training program on social stock exchange. I think that's the part,
I think they can attend the webinar, whoever wants to do that.
So that's one. And as the capacity building fund rolls out, there will, of course, be a structured calendar that will get produced.
For
We'll have
workshops.
session, yeah.
Got it. Okay. Thanks. Okay. The next question has too many parts to it, so I'm going to break it down for you. Is the offer document for ZC, ZP instrument also to be certified by a social auditor?
The offer document for ZC, ZP to be certified. I don't think so. It's a good question because I think some of these things we're still trying to work out. SEBI is still trying to work out some of these things. But I'm trying to think of the content. I would assume that if you want to add any social impact data related to what you've done in the past, in your past programs, that will definitely have to be certified by a social auditor. But
Right.
a forward-looking document which says what are you planning to do, for which you're doing a fundraise, I don't see why that needs to be certified by a social auditor. They will not add any value.
Okay. So currently there is no such rule.
Yeah.
Okay. And at what point in time of the listing, funding, or its utilization does the certification by the social auditor have to be done?
So it's a part of the annual impact report. I go to the disclosure slide, right? So the annual
Hmm.
impact report, this is the one that has the social auditor
Right.
report also.
Okay. So this impact report, Hemant, this has to be done annually. I
Yeah.
mean, because that's going to be difficult, right? So is this the same reporting, the program reporting that the nonprofits are typically used to doing to their, CSR companies? Or how is this impact report any different from, their quarterly or say 6 monthly reports that they share with their donors?
That's a tough one to answer, Vinny, because every company has their own formats.
Right.
What I would recommend is that, and perhaps Help Your NGO can help me doing this, that actually the regulation already has the template of this annual impact report. Okay?
Mm-hmm.
And perhaps as a follow-up to this webinar, we can circulate that template to the participants so they'll be aware of what the content is.
Definitely.
But one part of it is that a certification by the social auditor saying that if in your offer document you had said that this is what you would do in that financial year, then have you done that or not?
Right. Thanks, Hemant. Um, So, Hemant, you said 10 NGOs have registered so far and 7 are in the pipeline. Have any of them listed?
No. So
Okay.
there are
And you did
several.
a bell ringing for the nonprofits that are
Yeah,
registered.
yeah.
I think that was really nice.
Yeah.
Yeah.
We had the 7 guys. There was, at that point there were 7. We
Okay.
had all of them come up to the stage and do a bell ringing. No, that was very nice. It was actually very well received. Uh, but there are several of them who have come forward with ideas on how they want to go about doing the listing. But it's not yet happened. Nobody's listed.
Okay. And no social enterprises so far. These are all NGOs, right?
So there are
NGOs
several
rather.
in the pipeline who have expressed interest. And so far, actually, we've been focusing on the not-for-profit side,
Okay.
not really tackle those yet. But yeah, that will be the logical next step.
Got it. Hemant, how is SSE different from the CSR exchange of the company's corporate ministry?
That's the one that got launched on June 7th last year. They took Saman and
Yes.
rebranded it.
Yeah.
So 2 or 3 things, okay. One is that, and I'll be very honest, I've not really looked at the CSR exchange in detail. But one is obviously the most obvious answer to that question is that CSR exchange focuses on CSR. The social stock exchange, as of now, actually doesn't focus on CSR at all. But as and when CSR funds also get allowed on the CSR on the social stock exchange, it will include all kinds of fundraise, right? That's one. Second is that the CSR exchange is usually a one-to-one relationship, right? So one project, one donor. Whereas the social stock exchange is meant to be one-to-many. One project, many donors. It can also be one-to-one, but it should be one is to many also, right? And the third is that from a fundraising perspective, I guess it's a duplication of the first one, but it allows the social stock exchange allows anybody to contribute. And equally importantly, the fund flow is through the stock exchange, right? The CSR exchange, MCA CSR exchange, to that extent, is more of an information
Right.
portal, right? There's no fund flow happening. The fund flow happens outside the
Offline, correct.
CSR exchange, right? Whereas here, everything is integrated in one place. So you show an interest, you give in the money, you get the units credited to your demat account. All of that happens online.
Right. Got it. Um, the ZC ZP instrument has to be subscribed within what timeline, Hemant?
So the so there is a period, what is usually called in the stock exchange parlance as issue open period. The issue open period is essentially when the stock exchange says you can start putting in money into this particular issue, and it says stop, right? For a IPO kind of activity, it's 3 to 5 days, getting more and more to 3 days than 5 days. Whereas for other kinds of issues like debt issues, it can be up to 2 weeks. In case of social stock exchange for ZCZP, we have recommended that it be up to 3 weeks. And with a possible extension of another 3 weeks. SEBI has not yet accepted that recommendation. But again, I would like to reiterate what I mentioned towards the beginning of this. Get your fundraising done before you come and get listed. Right? You cannot, even in 2-3 weeks, I doubt if any of your project gets fully funded in 3 weeks. Right? You'll be very lucky. Or you're doing a project on behalf of a donor, and the donor said, I'll give you money, you do this for me. Right? Any open project where you're looking for donors, I doubt whether you'll be able to close it in 3 weeks. So it's important that you line up your funders before you come to the stock exchange. At least most of it, 80-90%.
So Hemant, a lot of questions around that actually. So if the fundraising activity has to be done before a non-profit is listed on the stock exchange, then what is the role of the stock exchange? And if there are no tax incentives or any incentives per se being offered to the investors and donors, then why would they go via the stock exchange? They would directly approach the organization and fund them.
Sure, I think that they should. I mean, that there's no compulsion to come via the social stock exchange. The social stock exchange does 3 things. Um, as I mentioned on the slide, one, it increases your reach dramatically, right? So you can actually tap into new pools of funders, which if you had to do it offline, imagine having resource partners in every state in this country. Right? Imagine the expense involved in just building that relationship. Second is that you gain national visibility. You get a platform where you can showcase your impact to the nation. Right. Third is that all of this you can do at a very minimal cost. Right. Your registration charge is 5,000 rupees. Your listing charge is 25 to 30,000 rupees at a very minimal cost. And the third is that you actually can use the social audit function to even for your other donors to show them that you're meeting standards that have been set for the social development sector by this country. So if you have an existing pipeline of donors and you're happy with them, there is no reason for you to come onto the social service. If you're looking for new avenues of funding, if you're looking for a platform that will allow you to showcase the impact you're creating and do all of that at a very minimal cost, then it makes sense.
Thanks, Hemant. Do these NGOs need to upload the donor details in the Form 10BD?
No, the stock exchange doesn't have any such requirement, but that's, I think, more of a tax requirement, right? Yeah. So none of the, sorry, just to be clear, we are not replacing any of the existing compliances that we've done.
Right.
Um,
And in terms of the zero coupon, zero principal instrument, if only 40%, or say basically lesser than 75% of the total, amount is raised, then can the nonprofit start the project with whatever is raised, or how does it work?
it's a complicated question to answer. So the straightforward answer to your question is no. Okay. You have said that you want 1 crore, right, to start the project. The assumption is that you have to have at least 75 lakhs, otherwise you'll not be able to start the project. And maybe that 75% number will change over time as we get feedback. Maybe it'll become 85, maybe it'll become 65, whatever, right? But the current assumption is you need at least 3/4 of the funds to start the project. However, what happens with the stock exchanges, that oversubscription is possible, right? So you can actually do it the other way around. I'm not suggesting you do this, but if you anticipate that you'll get lesser funders, let's say you anticipate you'll get 40% only, and you can start the project with 40%, because equally importantly that the project can be started with 40%, which itself I find a little surprising. But let's assume that you can start the project with 40% of the funds. Then my suggestion would be that you list at 50% of the project cost, right? So that 40% will give you 80% investors online, and you allow the issue to get oversubscribed, which means more investors can. So let's say if the project cost was 20 crores, you came on the stock exchange with 10 crores, but you allowed oversubscription, which means that even you can now go up to 20 crores, right? Then you're covered from both sides. You can start the project with 40% funds, but you can also take in all the way up to 20 crores.
Yeah. Thanks, Hemant. Hemant, could you go back to your slide on which has that flow chart?
Yes.
So there are some questions around SVF and SIF. So if you could just elaborate on that.
Sure.
I know that's like a whole topic in itself.
Yeah, correct. So actually the SVF and the SIF are the easy ones. Okay. So think of a mutual fund, right? What is a mutual fund? A mutual fund is uh, a pool of money where you and I put in as the investors, as the subscribers to the mutual fund. We put in money into this pool, and there is a fund manager, right, who is taking this money, and they have the strategy through which they invest that money. So it could be a small cap fund, it could be a technology fund. So depending on their strategy, they're choosing companies and putting money into those companies on your behalf. Right. And what you get in return are what are called units of the fund, right? So let's say the fund has a face value of 10 rupees per unit, and you put in 1 lakh rupees, then you will get 10,000 units in the fund, right? Now, as the mutual fund grows or comes down, the value of the 1 lakh rupees you put in goes up or goes down. Okay. And at the end, you can either sell the mutual fund, or some mutual funds are what are called closed-ended funds. At some point, they will mature or terminate, and you'll get back the value of your 1 lakh rupees when it terminates, right? The social impact or social venture fund, which actually is synonymous, are versions of that structure, that mutual fund structure. So just like in a mutual fund, you will, so, so when you subscribe to a mutual fund, there is actually an offer document that gives what are the objectives, what are the risks, what are the expense ratios, and the past performance of the fund manager, etc. Right? Mm-hmm. So a social venture fund, think of it like a simplified version of a mutual fund, right? Just like in a mutual fund, people can put in money into this pool, right? And just like in a mutual fund, there is an offer document which specifies what is going to happen with that money. Okay, so we are going to use that money to invest into certain sectors, right? So we will invest that money into education related programs that are happening in the Northeast.
Okay.
Where it gets a little trickier is that a social impact fund or a social venture fund can either make investments or make donations. In fact, that's one of the changes that we had asked. Uh, so therefore, not only can, that's why it's called a social impact fund, to change the name from a social venture fund to a social impact fund. You can either make investments into for-profit companies that are working in education in the Northeast, or you can make donations to NPOs that are working in education in the Northeast, depending on what you've declared your objective to be in the offer document, or you can do both. Okay. Um, so therefore, it's and it usually is a closed-ended or with a maturity, right? And at the end, if the fund had an objective of making investments and giving you back a financial return, you will get back whatever your money is worth at the end. If the objective of the fund was to make donations, then obviously you'll not get any money back. You can also have a hybrid fund which does both, which says I will do investments where required, I'll make donations where required, where in which case you'll at the end, you'll get whatever part of your money that got invested. So let's say you put in 1 lakh rupees, 50,000 got invested, 50,000 got given away as donation. If your 50,000 rupees that you had put in 10 years ago is today worth 5 lakh rupees, you'll get back the 5 lakh rupees. And the 50,000 that was supposed to go into donation goes as donation. Okay. Now, so that's broadly the concept of a social venture or social impact fund. The interesting thing is that because you now have the capacity of this fund to give donations, a group of NGOs can come together and create a social impact. Right? So let's say you guys are all working on village development. Yeah. Oh, yeah, sure. Right. Any common, right? You have adopted 10 villages, and somebody is working on water, somebody is working on education, somebody is working on health. You guys can all come together, and for that block, for that district, or whatever that 10 villages are called together, you can float a social impact fund, right? Raise common funds, and then your offer document will say so much money will go into this part, so much money, etc. And then you have a social auditor that will validate what's included. Right? So that's the social impact.
Got it. Thanks. I hope that answers some of those questions related to SVF and SIF. One question here is, are you allowed to donate to a non-profits corpus via the SSE?
So yeah. So as of now, there are no restrictions. The NGO can come with a ZCZP with the objective of donation to the corpus, or it can come with an objective of 50%, whatever. It can come with an objective that says half the money is going to go to my corpus, half the money else, thing like this. Then as of now, there are no restrictions.
Okay. And since we're on this slide, Hemant, the mutual fund funding structure is also an option for the NGOs, right? So I think,
so technically, a mutual fund structure is a for-profit structure, which is why the social impact fund structure was created. In the
because
sense
we
that
already have funding structure for NGOs, which is live with Quantum Mutual Fund, but that is specifically for NGOs. And I thought that, when I was reading the technical group's report, I thought that the mutual fund funding structure is something that was being discussed for the NPOs.
can you and I talk about that? Because I'd like to know more about this fund that you're talking about, maybe offline.
Sure, definitely. Impact we've covered. Okay. This is interesting. So, to what extent can investors be involved in the operations of the organizations they are supporting?
I don't think that's a stock exchange question, right?
Yeah, and I don't think they can be involved, right? I mean, think of it as an investor in any company for that matter.
Yeah. No, no. So yeah, sure. But plus, it's not a stock exchange question. I mean, if the guy, it's a do you have any donor that get involved in the operations of your project? Um, that we don't change. We have not changed anything on that.
Okay. Um, do these organizations need to engage RTA, merchant bankers, depositories for maintenance of the investors' data and units of investment?
Yes, and well, so there is a demat account. Like if you go to the ZC that slide, right, it should only be in a demat form. So therefore, obviously, there's a depository involved. Um, but an RTA, which is meant for record keeping of customer data, given that the minimum subscription amount is 2 lakhs, I would assume that on an average, maybe you'll get 20, 30 donors to an issue. You may not need an RTA. RTA is typically employed when you have thousands of investors and you need to keep track of their records and make sure they're getting statements in time, etc., etc. But yeah, sure. I mean, if you want to, you can engage in RTA. But I don't think you anticipated that people will engage RTA. But demat so depository definitely.
Thanks, Hemant. Um, do all social auditors mandatorily have to be chartered accountants?
Not at all. You have to pass that certification. That
Oh,
certification doesn't say anything about chartered accountant.
okay. Um, yeah, I think we're almost done. There are a lot of questions, like I was saying earlier, about the role of the SSE, but that we've already addressed. Timelines, commercials, I mean, the fee structure, everything has been covered. Yeah, okay. Let's take this as the last question. In case there is a dividend, so in case the value of the instrument increases, do the non-profits have to credit the funds to the investors?
I don't know. So you're talking about a not-for-profit, right? Not sure how will the value increase. Are you talking about, I don't
So
know who's
maybe
asked
I
of,
think they're referring to the SIF SVF structure where we took the example of the mutual fund. So if in case the NAV increases, then does the value that the investor receives at the end of the project increase?
so just so that I'm clear, I'm answering this question. Uh, First is that a zero coupon, zero principal, or any of the instruments that an NGO can raise money through are all donations or grants, and therefore there's no question of the value going up at any point or any money getting returned. Um, Unlikely. However, some on the for-profit side, or maybe in the hybrid structure where some of the money is going to a not-for-profit and some of the money is going to a for-profit, or if as a not-for-profit you want to raise a bond issue where you want to pay interest, maybe for your corpus, then of course, whatever is the current value of the money on maturity, you will pay, and whatever you've mentioned in your offer document saying you'll pay dividend or you pay interest or whatever, you'll have to comply with whatever you have mentioned as a part of the issued offer document.
Thanks, Hemant. Thanks for answering that last question. Um, okay, sorry, there's one more question pouring in. We have some time, so I'm just going to take this as the last question. Can an NGO use the grant for capital investment or to purchase machinery? So basically for capital assets.
Yeah.
Yeah, so it's basically the non-profit call. Okay.
All right.
Yes, thanks. Thanks, Hemant, for answering that last question. With this, I'd like to conclude the webinar. And in case we haven't been able to answer your questions, kindly send us an email on info@helpyourNGO.com and we'll answer them in our upcoming blogs on the SSE.
Yeah,
Hemant?
yeah. So this is the URL for the portal. And so,
Yes.
Vinny, if you can also put this up in your blog over.
Sure.
Yeah.
Sure, definitely.
All
And Hemant, on behalf of Help Your NGO, I would like to express my sincere gratitude for taking the time to speak with us today. Your experience, expertise, and insights were incredibly valuable. I'm so glad we got to do like a 45-minute long Q&A. I think we've answered most of the questions, and we hope to have you with us very soon.
Yeah, absolutely. No, it was a pleasure and an honor. And I loved some of the questions that got asked. And I also learn in each of these sessions, just as I hope you guys are learning. And I will be back whenever you want me to. I love taking these sessions.
Thank you
Thank
so
you.
much. Also,
Bye.
thank you to all the attendees for being such a wonderful audience. We will be posting the video of this webinar on our YouTube channel. So, feel free to share it in your network. Hopefully, this should be done by end of this week. Thanks. Thanks, everyone. Have a
Bye
great
bye.
evening. Bye. Thank you.